Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today is the 10th of May 2019, so welcome everyone. Welcome to this Friday's afternoon session where we're going to have a quick look at the markets, see what's happening with them right now, just a few instruments. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so now then, let's quickly jump into the charts. And the first one I want to touch on here is the Nasdaq Composite. So yesterday the index closed slightly in the red, but as you can see, it did fell nicely here to the downside and almost managed to reach the 200 EMA here on the 4-hour chart. Kind of fell shy of course, a few points, couple of tenth points, that I would say, but still this target for us remains in play. We're still targeting the 200 EMA here, even though we did have this nice retracement here to the upside. Still, it wasn't enough to kind of close the day in the positive territory yesterday. So. And also what's important is that it wasn't able to actually push back above its 100 EMA here on the 4-hour chart, shown as the green line. So that's why, guys, in other words, we're still looking for that some downside. In a way, we could see maybe this one dropping back down and potentially traveling all the way here again towards this yesterday's lows near the 7,796, and then potentially hitting this 200 EMA. But slightly below that, we do have another good potential target here near the 7,738 zone, which, as you can see, previously acted as a very good area of resistance, especially here on the 26th of March and also on the 29th of March. So this time it could take the role of being a nice support zone. So but then again, for now, guys, continue observing some of these key resistance levels. For now, looking at the this picture here, let me just quickly draw this downside resistance line. You can see that yes, the index continues to trade below that. So basically, in other words, as long as this remains intact, we will continue aiming for lower areas. And for now, even though we did have this nice push higher yesterday, still, as I said, it wasn't enough to close the day in the positive territory, and we could see maybe a follow through today as well. Another sell-off here. Now, of course, the big question here: will it actually reach the yesterday's lows? If it does, and if it might actually overshoot it a little bit, maybe even actually test this 200 EMA and then retrace back up again. So that's, of course, this our main scenario. This is what we're thinking right now in terms of the upside. Well, we would like to see a nice good push back above the 7,940 level, or in other words, back above this 100 EMA here, shown as the green line. This way, we could potentially then target slightly higher levels. Of course, we will aim for this little target. Let me just quickly put that on the chart. We'll aim for the psychological 8,000 level, but if that fails to withhold, then yep, further acceleration to the upside could be possible. We could revisit the 8,057 zone, approximately there, or maybe around this area somewhere here. But nevertheless, first, for us, what we need to see in order to kind of get comfortable with higher levels, we would like to see initially, of course, a break above this upside support line, and of course a move above this 7,940 level. So in a way, actually it would happen at the same time. So that's why for now, guys, be very careful with this one. And yep, let's see how this is going to play out. But for now, as long as this continues to trade below this downside resistance line, we are going to remain somewhat more bearish than bullish. Very quickly, silver. I just wanted to jump into this one. I haven't looked at this one for quite a while, but this is quite an interesting picture here. So basically, it is traveling lower. It continues to trade below this kind of this downside resistance line taken from the high of March here, from the highest point of March. So this nice downside resistance line kind of continues to play its key role. We can see that this week silver did try to push higher, did try to break above this 14.97 level, and at the same time break above this downside resistance line, but kind of failed to do that, and it is a bit of a tentative one, because I do understand that these highs are not hitting here, but we are touching these first two highs, so that's why we're going to keep a close eye on this one. And just because, and also as you can see, this downside resistance line got confirmed here this week, so basically that's why we're going to draw it this way and not, for example, that way, guys. So for now, keep your eyes on this one. Certainly this creates this kind of slightly negative atmosphere. The only thing is, as you can see, the commodity, the precious metal, managed to travel lower, managed to travel all the way here towards the 1473, and even actually traveled below that. But as you can see, that the 4-hour candle never closed below that, so that's why this area becomes a very important one to watch. Also, it marks here the inside swing high here of the 2nd of May. If we see a drop below this, then that's great news for the bears. We could see a further decline, and what we're going to target here initially is going to be the 14.58 level as well, acting as a good area of support here back on the 8th of the 2nd of May. So this is going to be our first target if we see a drop below the 14.73 zone. In terms of the upside, even if we see a retracement here, push higher, and then a break above the 14.83 zone, still we're going to remain neutral in this area, because it's kind of the upsides, this downsides resistance line that the commodity would need to overcome, and of course this level right here near the 14.97, in a way, if you like to round up things, then yep, you could take it from the 15 level, just for the sake of it, just for that better confirmation. But basically we will start considering higher levels if we see a push above the 14.97, then of course the psychological 15 level, which coincides with the 200 EMA here on the 4-hour chart, and then if those fail to withhold the bull pressure, then yep, this could be opening the path towards higher levels. Initially we will target the 15.10, which acted as a good area of resistance, as you can see here, back in around mid-April, and or should I say around the 12th of April, and also around the 17th of April. Then if that doesn't kind of stop it, then yep, further higher levels could be possible as well, so 15.20 or even 15.33 here. But first, before we consider a possible move higher, we need to see that nice good break here, of course initially above this downside resistance line, and then of course above the 14.97. That's initially what we're going to be looking at, and then just for better confirmation, of course the psychological 15 level, that's what we're going to be keeping a close eye on. And in terms of the downside, for now this is the level for us to watch, so that's around the 14.73, and even then if we see a break below that, we're still not going to drag it too much to the downside, just up until here, up until the 14.58 level. So keep your eyes on that one. USDCAD, very quickly on this. So USDCAD recently, just like an hour ago or so, about an hour ago, data came out from the US and Canada, so we did get the headline month-on-month inflation figure, which kind of disappointed slightly by 0.1% in the US, and we at the same time we got the Canadian employment numbers, which surprised everyone, and they came out better than expected by 0.1% as well. So better than expected Canadian employment numbers, but worse than expected headline CPI figures for on a month-on-month basis. So this resulted here in the USD-CAD sliding lower, or actually even selling off sharply here, breaking below the 1.3450 and then traveling all the way here towards the 1.34 zone. Now this is what I was talking about in one of my previous videos, where I was covering USD-CAD, and I was telling you guys to keep a close eye on, of course, on this level here on the 1.34. This is going to be very interesting to see if the pair actually closes below this level today. If it doesn't close below this, then of course, depending on the kind of the price action here, we'll see how this is gonna evolve next week, because we may see maybe a rebound and a push back up again here. As we noted several times, it does like to flirt with some of these key levels, and basically if it travels back above this 1.34 level and travel also remains above the 200 EMA, now this could be a chance for the bulls to step in, but of course we'll take it next week. We'll see how this is going to perform. For now, of course, looking at this picture, this is more bearish than bullish, but then again, we do have a good potential support area right here near the 1.3370 zone. So keep your eyes on that one. Keep your eyes on this level. If of course, if the pair continues to slide lower, because this could be that good opportunity maybe to see the rate stalling and then maybe reversing for a small correction back to the upside. That's of course if we see a test of this 1.3370 zone, and of course if this decides to kind of get stalled here near this level. Anyway, jumping into AUDCAD very quickly. So this is very interesting as well, because even though, yes, I mean it is taking a hit because of the good Canadian numbers, I mean the stronger Canadian dollar, but the only thing is that it did travel lower, but we are keeping a close eye on this level right here near the 0.9380, which, as you can see, previously acted as a good area of support. Now I do understand we did have a few overshoots here, especially on the 7th of May here, and also today we're having that breakthrough here. For now it seems like a false breakout, but again, still we have the whole US session to trade through, and we'll see how this is going to perform, because if this continues to slide lower and if we see the 4-hour candle staying below this level, below the 0.9380, then, well, I mean, this could be opening the path towards lower areas. Of course, we will keep a close eye on this target here, where actually the bear got held near the 0.9369 level, approximately there. By the way, this level also marks the low here of the 27th of February, so it's basically around here. So very good potential target here, of course, but initially we will target this, we will keep an eye on the 0.9380. We'll see if the 4-hour candle stays below this. If it does, then yep, we will aim for the 0.9369 zone, approximately there. But if that fails to withhold, a much better area of support could be seen around here near the 0.9355 level, which acted as a nice inside swing high here of the 28th of February, and also acted as a low here of the 22nd of February. So that's why this level here could be a nice potential target for AUDCAD, but we will only consider this if we see the 4-hour candle kind of remaining below the 0.9380 zone. So keep your eyes on this one, guys. In terms of the upside here, well, we are taking a more conservative approach, and we're going to wait until we see a break of this downside resistance line taken from the high of the 17th of April, and then a strong push above the 0.9432, and only then we will aim for slightly higher levels. Initially we will target the 200 EMA, which could be around the 0.9468 level. So for now, keep your eyes on this. Let me also actually quickly mark this for our future reference, so that we would know what we were talking about here, and yep, and this is in terms of the upside, and this is in terms of the downside. So quite important levels here. Keep your eyes on those guys. Euro dollar having a nice push here, slowly pushing steadily, of course carefully, but still pushing to the upside. It's now above this area here that I was talking about in one of my previous videos, the 1.1228. It's also now above the 200 EMA. Of course, currently looking at this picture, of course, yes, it is looking somewhat more positive than negative. The only thing is that be very careful, because the upside could be limited due to this downside resistance line here, taken from the high of the 9th of January here. So keep your eyes on this one, guys. Like I said, we could see a further push higher here, a test of this downside resistance line. The only thing is that what could happen here as well is something like this that we saw here on the 20th of March, where we could maybe see a break above this downside resistance line, a push higher, and yep, then the next day we may see a reversal and a drop back down below this. But of course, for now, let's not over speculate here too much. For now, let's take it as everything is right now. A nice good push above this downside resistance line could, of course, increase the chances for this pair to travel further up. We could target areas like the 1.1280 zone. So 1.1280 could be a nice good potential area of resistance, but if that fails, then yep, the slightly better area of resistance could be seen near the 1.1325 level. As you can see here, back on the 12th of April and also on the 17th of April, it acted as a very nice area of strong area, I would say, of resistance, from which the pair kind of sold off and traveled lower. But again, before we could consider this area, we need to see a nice good push above this downside resistance line. If suddenly this reverses back down, drops below the 1.1228, well, it's not really good for the pair. Of course, we may see this one sliding lower and potentially maybe hitting this tentative upside support line here. But to be honest, actually, now what we could actually redraw this, and in a way we can actually get rid of this, and what we could do here is draw this little line right here. So this is a bit of a tentative one, because it's kind of not really testing all the levels here correctly, but something like this could be possible. Something like this could play out again, but again, we will consider the downside only if we see a drop below the 1.1228 level again. And the GBPUSD, very quickly on this, so having a nice push as well, probably maybe just fractionally better than the euro dollar here, and but still not enough for us, let's say, to kind of jump on this one and kind of aim for higher levels. First, we need to see a nice good push above the 1.3045, and then we will target higher areas like the 1.31 or even the 1.3123, 25 zone, approximately there. That's in terms of the upside. But in terms of the downside, we need to see this one maybe sliding back actually below this area of support here near the 1.2975. You can see that it was tested this week already, but kind of the 4-hour candle failed to close below this. So that's why we're going to aim for this level again as our gateway towards lower levels. So the 1.2975, a drop below this could potentially lead this one further down. This is where we will target this little area here, this potential area of support near the 1.29 zone. But if that fails to withhold, then yep, slightly lower areas could be possible as well. So but for now, let's go step by step. Of course, looking at this picture right now, it doesn't seem that the pair wants to travel lower. We are going to be keeping a close eye on this 1.3045, because also at the same time, if we see a push above this level, we also see a push above the 200 EMA, so which also could add a little bit of a positive spin here on the GBPUSD. Okay guys, I hope you found it useful. Thank you very much for watching and listening and sticking around till the end. And if you want to join me on Monday morning at my Traders Espresso, and that's 6 o'clock GMT time. But for now, I hope you have a wonderful evening. For those who are still trading the US session, be very careful. Happy trading. And for those who are not, then yep, like I said, have a nice weekend, everyone. Bye bye.